It's kind of depressing to see alts run because that usually brings us back down as a whole. Bull market has legs, and I think we can go probably anywhere up to 500,000 to a million in the next 12 months.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Samson Moe says the Bitcoin bull run hasn't even begun yet. He breaks down why and what's coming next. Let's dive in.
The real inflation rate, and you peg it to something real like eggs, you get 11% annually. So if you apply that to the previous all-time high in 2021, that takes us to somewhere around 101K. So, that's kind of the floor. That's just keeping up with inflation. That's Bitcoin just keeping up with inflation. So 120K, 130K, that means you're beating inflation by 20% over a 4-year period or 30% over a 4-year period, which is not really spectacular. So I think we have a lot of room to run. The bull market has legs, and I think we can go probably anywhere up to 500,000 to a million in the next 12 months, because this is also a delayed market movement too. If you think about it, we should have ran already. We should already have been at 200,000 a coin, and we're still at 120. You have countries adopting Bitcoin. You have the ETFs, which are just taking in a massive amount of capital and eliminate the bottleneck for moving capital into Bitcoin from the legacy markets. There is no more barrier. And then you have companies like Strategy and now Blockstream that are also moving into the treasury space. And Strategy alone has accumulated 600,000 plus Bitcoin. So, just like doing quick back of the napkin math, it just doesn't seem possible that we are still hovering around, inflation adjusted Bitcoin all-time highs from 4 years ago at 100 to 120,000. We should be well over 200,000 just by my approximate estimate.
Arthur Hayes believes we're heading into one of the biggest crypto booms the world has ever seen. His bold prediction? Bitcoin hitting $250,000 and Ethereum surging to $10,000 by the end of 2025. The reason, he says, is a mix of endless war, mounting government debt, and central banks flooding the economy with money, all without raising taxes. That combination, Hayes argues, creates the perfect storm for digital assets to explode in value. He sees global conflict like the wars in Ukraine and the Middle East triggering wartime-like government spending. Defense budgets are ballooning. America alone crossed the $1 trillion mark in 2024. Instead of cutting costs or raising taxes, governments are turning to central banks to print money, a move that drives inflation. Hayes doesn't see inflation as a problem, though. He sees it as rocket fuel for crypto. With inflation rising, people need a place to park their wealth that's outside traditional systems. Crypto, being scarce and globally accessible, becomes that escape valve. It benefits from inflation without making life harder for the average person, unlike rent or groceries. Hayes also points to a friendlier regulatory climate and increasing institutional interest. He believes even politics, especially under Trump's potential second term, could push crypto adoption further through tax incentives and clearer rules.
This has a lot less to do with Bitcoin than just the markets in general for the US. So the Genius Act, it adds clarity, but I don't think it changes fundamentally anything about Bitcoin. It gives a better structure and guidance on stablecoin issuers, and that is good for stablecoin issuers. But even without that, I see stablecoins continuing to grow. This is just the US government becoming more comfortable with the idea of stablecoins, and the fact that stablecoins like Tether are just taking up a massive amount of treasury buys and holdings equivalent to countries. I think Tether is ranked somewhere in the top 20 now of all holders of UST bills. The fact is, Bitcoin and stablecoins are now integrated into the US economy permanently and in a very deep way. I think what is interesting for Bitcoin is one, the audit of Fort Knox, as we've been promised, and two, passing of the Bitcoin Act from Cynthia Lummis that would allow the US to actively accumulate Bitcoin. Now, there's a bit of other interesting news that came out today, which was a reporter filed some Freedom of Information requests and found that the U.S. Marshals only have about 28,000 Bitcoin now, I believe. And that's a lot less than was expected. So I think these bills currently in motion or on the table are missing the bigger picture. The bigger picture is that the U.S. needs to accumulate Bitcoin very, very rapidly if it wants to have a significant Bitcoin reserve treasury. So the window is closing, and I'm not sure they really realize that yet now, because if they did, they would be talking about the Bitcoin Act, not these other bills. It's kind of depressing to see alts run because that usually brings us back down as a whole. So Bitcoin rises, and then the people that are investing in altcoins make some money, and then they pump their coins, right? So it's always a cycle. Bitcoin goes up, it leads the pack, and then you see alts run a bit. And then things come back down, and all the investors in altcoins get liquidated, or they blow up somehow, or something happens, and then Bitcoin comes down along with it a little bit, and then we go back up. But the cycle rinses and repeats over and over and over. I don't really worry too much about the alts because they're all very small cap coins, and compared to Bitcoin, it doesn't really matter. They can easily manipulate the floats and move their prices, and they can drive their prices through direct announcements like Ripple trying to do business, right? Like, what is Ripple? It's a company now, but it has a crypto coin. But in real world, that should technically be a stock or a security. But here we are. But I'm not really worried about that. I think in the long run, Bitcoin dominance will continue to increase. And I think this might be the final alt season, if there is one. But it doesn't look very promising.
Mina Theodorou, co-founder of Australian crypto exchange CoinStash, believes that the traders who approach this crypto cycle with logic over emotion are the ones most likely to succeed. According to Theodorou, the smartest strategy right now is to stick with what's worked in past cycles, recognizing patterns, being analytical, and not letting hype or fear drive decisions. He explains that every cycle seems to follow a similar flow. Bitcoin hits new highs, its dominance peaks, and then it slows. That's when altcoins begin to surge, catching up as capital rotates. Eventually, within the alt season, meme coins start to explode as traders seek bigger, faster returns. That pattern is already beginning to show signs now, as Bitcoin recently topped $123,000, but its dominance has dropped over 7% in the last month. At the same time, Ethereum is up 20%, and the altcoin season index just flipped into altcoin season territory. Others in the space are echoing this shift. Arthur Hayes is calling for an explosive Ether rally, predicting a $10,000 ETH by year-end. While Bitcoin maximalists like Michael Saylor remain bullish long-term, others like Sapo Bank CEO warned that a bear market could still appear without warning. For now, Theodorou believes a steady, emotionless mindset is the winning edge.
If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.